Yo, what's going on, YouTube? And welcome to my channel. I'm going to be reading through my reports of today this morning, about 11:50 on January 24th, 2026. And yeah, I want to do these reports daily just to kind of put myself out there and to let people know that I'm still here. I'm still building out my website. Um, and is this thing? Yeah, okay, I'm recording. Cool. All right, so let's get on into it. Um, I'm going to go through what's moved in the markets from yesterday to today, hopefully. Um, I kind of did read through the report very briefly, and it does seem quite accurate, so I'm just going to run with it. So, oh, and this is also after I changed the instructions again for like the third day in a row. But yeah, so I'm also gonna this is all gonna tie back into silver, crypto, and my SolShot silver framework, without much fluff and without much guessing. Hopefully, this isn't financial advice. This is just a report that I do daily. So everything here is anchored in today's real headlines and also price actions. All right, now silver didn't just rally yesterday; it broke through the $100 barrier level pretty decisively. And that actually matters because this wasn't driven by just retail enthusiasm anymore or even speculative futures leverage like it normally is. And what happened today was, or yes, yeah, today wasn't what happened today was sustained physical demand, meeting a thin market at the exact moment where institutional flows are rotating out of the bond market. Now, the deeper meaning here is that the silver is no longer trading as an industrial input or a volatility trade. It's being repriced as a actual monetary metal. And this matters in the macro context because real yields remain unstable and sovereign debt issuance continues to accelerate even further. For silver buyers, today it confirms that the ownership matters more than the actual exposure itself. And for crypto users, this also reinforces the same scarcity mindset narrative that's being shown. Assets without dilution outperform when trust erodes. And for my website, SolShot Silver, this is exactly why tokenized silver tied to real inventory exists. And this is the market validating that philosophy entirely in real time. And that leads to um, directly into our next development for this whole um, briefing, I guess you could say. Gold is pushing closer to $5,000 today, and it's not just because of more panic, but also because of the allocation models that are changing. Funds that are traditionally capped precious metals, um, funds that traditionally capped the precious metals exposure at low single digits are now reassessing that entire framework as bonds are failing to hedge equity risks. And now the important part is that the gold's move was more orderly than anything else, which tells you that this is an institutional positioning, not fear buying, but in the macro terms, this reflects a world where the capital preservation is again more of a priority than ever before. And now for silver buyers, gold's move legitimizes the silver's breakout as part of a broader monetary shift. And for crypto users, this reinforces why exactly Bitcoin is still framed as digital gold, even when price is lagging very significantly compared to the previous markets. And for my website, SolShot Silver, it validates the convergence thesis. The real assets and digital rails are merging together and not necessarily competing anymore. Now let's talk about Bitcoin itself, the king of crypto, because its underperformance today confused a lot of people. And Bitcoin traded sideways while metals have surged. And that's not just a failure, it's a rotation from the crypto markets into the metals markets. And what happened is capital sought immediate safety into assets with more zero network risk and zero regulatory uncertainty. Give me a moment, I need a drink. But yeah, everyone, this is turning quite bullish from a website, I will say. And I don't even really have to dig very far. Like the entire narrative um, is kind of moving away from the traditional market structure, or the market systems, I should say, like hedge funds, and it's all moving on chain. Um, but the deeper meaning here is that Bitcoin is still seen a long-term hedge, still seen as a long-term hedge, not necessarily as a short-term refuge anymore. And in the macro terms, this reflects more uncertainty around liquidity rather than inflation by itself alone anymore as well. And for silver buyers, this shows why physical assets still lead during early defensive phases, especially in times like this, where there's a lot less trust, there's a lot less trust and seemingly more scarcity in the markets, like the job market, the housing markets, the credit markets, um, banks themselves. But I digress. For crypto users, it's highlighting why the infrastructure maturity actually matters. SolShot Silver, my website, sits exactly within that intersection, and I'm looking to capitalize on it and build something that's going to pretty much outlive me myself, and hopefully be something that helps just many other people. Hopefully, I've created a great value proposition and have shown that effectively on my website. But using those crypto rails without the crypto fragility when it comes to like yield or whatever. Um, Even though yield would be really nice, just having the crypto markets themselves accepted into the traditional finance system would also be a huge move for the whole economic system entirely. So even if we just give up the yield, y'all, um, but honestly, I don't know if I don't know if the world will follow. You know, like there hasn't been a global understanding when it comes to the blockchain system just yet. I haven't heard a lot of the news coming out of anywhere except from the United States, mainly because it's been the world's, you know, main currency for a long time. But anyways, I digress. Back to the report here. Ethereum has made headlines today for accelerating work on quantum resistant security, which is actually quite surprising news considering that um, quantum computing and quantum physics is relatively new, and markets didn't necessarily ignore it either, which shows a lot of fear in the markets. And this wasn't about the price; it was about the longevity. So the deeper meaning is that the networks themselves are now competing on survivability, and they're using fear to do it. It's not just the throughput, it's in a macro context that mirrors a broader trend where institutions care more about the durability than the innovation speed itself. So, for silver buyers, what this means is This reinforces the idea of assets built to last. And for crypto users, it shows why the foundational design matters. For Solana, I think it's got a really great foundational system. It just handed a really great DDoS attack not long ago, reducing its MS, or rather increasing its MS to about 450, which is not that bad. And for my website, it reinforces why tokenization remains more of a resilient infrastructure. And now moving into the equities, they were very volatile this morning, and the driver wasn't the earnings necessarily, it was the policy risks. The futures reacted to renewed tariff threats, and particularly around the North American trades. The deeper meaning here is that the globalization assumptions are being repriced in again. And in the macro terms, this raises the costs. It also tightens the margins and it fuels the inflation persistence that's happening. And for the silver buyers, tariffs are more of a bullish presence because they raise input costs and stress supply chains more than anything else. And for crypto users, policy volatility accelerates the decentralization interest among many blockchains. And for my website, this benefits from both the dynamics of anchoring value outside of the traditional systems. So now moving into the bonds markets, they are quietly being sent the loudest signals today. The yields moved higher even as risk assets have been wobbling. And this tells you that the confidence in sovereign debt is in fact eroding. It's not just a growth story anymore. It's an actual trust story within the monetary system. And the macro context, this is why metals thrive when the bonds fail. And for the silver buyers, this confirms the silver's role as a more of a yield alternative asset. But for crypto users, it explains why the fixed supply assets also matter. And for my website, which does have a fixed supply of 10 billion tokens for its rewards programs, this is the core thesis that is playing out. And mining equities lagged physical silver today, and the divergence also matters. What happened is investors chose a more direct exposure over the more optional risks that are at play. And the deeper meaning here is that the ownership is being more prioritized over more leveraged plays. And in macro terms, this mirrors a more broader aversion to the complexity. So silver buyers, physical beats the proxies, from what we can tell. And for crypto users, the self-custody beats the custodians, which my website offers a non-custodial trading bot service, which is what the world is actually leaning towards. SolShot Silver's structure, my website, reflects both of these lessons today. The dollar weakened today, but not dramatically. That tells you that this rally isn't just a currency effect, it's an allocation-driven effect. And in macro context, this shows global demand for more real assets, not just a dollar hedge anymore. And for silver buyers, this strengthens the case for more long-term holdings. For crypto users, it supports the store of value narrative. For my website, it sits directly within that crossroads yet again. And inflation, here's where the expectations ticked higher today, even as growth forecasts have indeed softened. And that combination is historically rare, even in extremely supportive, even have been extremely supportive for the metals markets. The deeper meaning here is stagflation risk is being priced yet again, which is not necessarily a good thing for the current market structure, but it is being repriced. And for silver buyers, this is the prime territory. For crypto users, it explains why the scarcity narratives are regaining its relevance. And for my website, It exists exactly for this environment. Now the ETF flows are going into precious metals, and they have accelerated this morning, confirming that move isn't necessarily a thin margin. It's quite a big move that is going to be building up, and institutions are indeed participating. In the macro terms, this changes market structure entirely. For silver buyers, it validates the accumulation, and for crypto users, it mirrors early ETF dynamics being seen in digital assets alongside physical silver and other precious metals. My website bridges both of these worlds. So just a quick plug, my website promotes pretty much everything that crypto um, has in store. I could have it create NFTs very easily into the books that people are, able to print, and so there would be like a blend of like the physical world and not only just the digital world for NFTs anymore. Like I could actually see a bridge being built here, and so yeah, it exactly here. Industrial demand narratives also return today, particularly around the energy infrastructure. So the silver benefits this directly because silver is a great conductor. The deeper meaning here is that green transition spending hasn't necessarily slowed. It's just become more of an expensive thing, and that we don't necessarily know everything about. For silver buyers, that tightens supply, and for crypto users, it reinforces the digital feedback loop that I offer. My website monetizes that link directly with our redemption system. Uh, Sorry, let me get another drink. This is great stuff. I really like doing this. This is a lot of fun. All right. So, yeah, exactly. It reinforces the physical digital feedback loop. So not only do I provide physical silver rewards for using the platform through the blockchain features, but I also am thinking of a bridge between like the books and NFTs and the digital realm, which would be pretty insane. Um, Now, for volatility indices, they rose modestly this morning as well, but not enough to signal any panics. This tells us that the markets are adjusting, but not necessarily breaking right now. Again, you'll hear a lot of people say that there's a wobble in the markets, and that will be very true. For silver buyers, early positioning really matters. And for crypto users, patience matters more than anything else because it's all winding up to push the global markets is from what this is all playing out to look like. And from my website, it's designed directly for steady accumulation. It's not designed for insane hype or reactionary, it's designed for like legitimate users of the platform. Um, and now liquidity conditions have tightened slightly today overall as the repo markets have showed stress. So, what does that mean? Honestly, I don't know exactly. Let's look it up here. So, um, what are the repo markets? Repurchase agreements. Oh, okay. So this is like when you lend cash or borrow cash. Um, so it even affects the housing markets. Um, So the repo markets showed some stress, and this is because we're coming up on a lot of 30-year mortgages where the interest rates were very low for a very long time, and they haven't necessarily gradually caught up just yet. And we're probably going to be feeling this a lot more in the future too. It's not just right now. Um, well, maybe a bit less in the future is what I should have said. Um, but in any sense, in the macro context, the tighter liquidity favors assets with no counterparty risk. Um, for silver buyers, that's pretty obvious. They're going to be doing really well. For crypto users, it's directional based on the market structure of the cryptocurrency token. For my token, there is a fixed supply and a certain, distribution mechanism through all of its features. And my website removes that counterparty risk simply by design. And the central bank commentary today remained very cautious, but not exactly committal. So the markets interpreted that interpreted that as more of a tolerance for the inflation that has been overshot. And for the silver buyers, that's bullish, and for the crypto users, that's a bit more validation. And for my website, that thrives in the policy ambiguity altogether. Now, for the global equity correlations, they have increased today, which means that diversification will be. I'm sorry, let me just start over there. Global equity correlations have increased today, which means diversification benefits are shrinking. In the macro terms, this pushes capital towards the more alternative assets. For silver buyers, that's somewhat supportive, and for crypto users, it's actually from more familiar territory for them. And for my website, it offers a diversification opportunity without all of the complexity. Um, and for the retail participation, we're coming to an end here on the report, just so everyone knows. But the retail participation has remained low today. It is confirming that this is not a speculative frenzy anymore, and that really matters, especially for silver buyers, because it means that the upside still remains. And for crypto users, it remains that this cycle is still quite early. And my website, SolShotSilver.xyz, is positioned ahead of all of this sentiment. So please go check it out, link in the description below. And finally, I'm going to tie this all together today in a very simple message, in that the markets are still repricing its trust, it's still repricing its durability, and it's still repricing its ownership altogether and how the future will look. The silver has led because it's very tangible, and crypto matters also because it's more programmable than the current monetary system. SolShot Silver, which is my website, exists because the future belongs to assets that are both programmable but also durable, trustworthy, and you can own them. Thank you everyone for tuning into this stream today. If you're just catching this just after the fact, I hope you enjoyed my report. Please subscribe and like the video. Thank you.